Like and subscribe and click the bell icon to get new video updates.
Elon Musk trolls Twitter. Matt Levine is a Bloomberg opinion columnist covering finance. He was an editor of Dealbreaker, an investment banker at Goldman Sachs, a mergers and acquisitions lawyer at Wachtell, Lipton, Rosen & Katz, and a clerk for the U.S. Court of Appeals for the Third Circuit. At Matt Levine programming note, money stuff was supposed to be off today, but then my boss, Elon Musk, called me into work anyway. Oh Elon, none of this. Come on. Temporarily on hold is not a thing. Elon Musk has signed a binding contract requiring him to buy Twitter. Legions of bankers and lawyers and Twitter employees and special purpose vehicle promoters are working to fulfill his legal obligation to get the deal closed. The parties here too will use their respective reasonable best efforts to consummate and make effective the transactions contemplated by this agreement, says the merger agreement. Section 6.3a. He can't just put that on hold. That contract does not allow Musk to walk away if it turns out that spam fake accounts represent more than 5% of Twitter users. We discussed this last month, when Twitter admitted in a securities filing that it had, slightly, overestimated its daily active users for years. The merger agreement contains a provision that allows Musk to walk away if Twitter's securities filings are wrong, and this 5% number is in its securities filings, but only if the inaccuracy would have a material adverse effect on the company. See sections 4.6a and 7.2b. That is an incredibly high standard. Delaware courts have almost never found an MAE. An MAE has to be something that would substantially threaten the overall earnings potential of the target in a durationally significant manner, the courts have said. There is a rule of thumb that an MAE requires a 40% decrease in long-term profitability. If it turned out that 6% or 20% or 50% of Twitter accounts are bots, that will be embarrassing and might even reduce Twitter's future advertising revenue, but will it be an MAE? No. Pending details supporting calculation is not how this works. This disclosure, that the average of false or spam accounts represented fewer than 5% of Twitter's monetizable daily active users, has been in Twitter's securities filings for many years, always with a caveat that in making this determination, we applied significant judgment, so our estimation of false or spam accounts may not accurately represent the actual number of such accounts, and the actual number of false or spam accounts could be higher than we have estimated. Musk had the opportunity to read these filings before offering to buy Twitter, and he had the opportunity to do due diligence on these numbers before signing the deal. He declined. He can't now go to Twitter and say actually now you need to prove that your user numbers are right. If he wants to walk, he has to prove that they're wrong, and also that they're wrong in a way that has a material adverse effect on the business. Which he obviously can't do. What is going on here? My initial reaction was that Musk was joking, that this was just a way to troll people online. It is, after all, Friday the 13th. Still committed to acquisition, he tweeted 2 hours later. Obviously this would be a bad joke, insofar as it sent Twitter stock tumbling as much as 25% in pre-market trading. You are not supposed to say things that aren't true and that will affect the stock of a public company that you are trying to buy. That is what is usually called securities fraud, or what I sometimes like to call light securities fraud. Musk has a long history of light securities fraud. He used to make jokes about Tesla Incorporated introducing new products or going bankrupt, and he notably settled a fraud lawsuit with the U.S. Securities and Exchange Commission because he tweeted that he had secured funding to take Tesla private but had not. If he just woke up feeling frisky and tweeted a joke about Twitter's bot accounts, a joke that wiped billions of dollars off Twitter's market capitalization, that would be totally unsurprising. Bad. Not really allowed. But very much in character. Another possibility is that Musk really is laying the groundwork to walk away from his deal with Twitter. There is a popular view that Musk has the option to abandon the deal if he pays a $1 billion breakup fee. As we have discussed around here, That just isn't true. The contract gives Twitter the right to force him to close and put up the $27.5 billion of equity one that he has committed to the deal, as long as his debt financing is available. Section 9.9b. The contract also gives Twitter the right to go to court to force him to try to get that debt financing. Sections 6.10a and 9.9a. There is, so far, no reason to think the debt financing won't be